Cheers to our new home. I don't know how we're gonna pay for all this. For decades, homeownership has been promoted as the ultimate symbol of financial success. Most people grow up believing that buying a house automatically means building wealth. But from a financial perspective, not every house actually behaves like a true asset. An asset should generate income or grow in value without draining your cash flow. For many homeowners, a house continuously demands money instead of producing it. Property taxes must be paid every year, regardless of whether your income increases. Home insurance premiums usually rise over time and cannot be skipped or delayed. Unexpected maintenance issues can appear suddenly and cost a significant amount. Plumbing, electrical, and structural repairs are unavoidable responsibilities of ownership. One major repair bill can quickly erase months or even years of hard-earned savings. Many homeowners also face mandatory homeowner association fees every single month. Mortgage interest dramatically increases the true long-term cost of a house. In the early years, most mortgage payments go toward interest, not actual ownership. Building equity through homeownership often takes far longer than people expect. Housing markets can fluctuate, meaning home values do not always rise consistently. When markets decline, homeowners may struggle to sell without taking a loss. Unlike stocks, houses are illiquid and can take months or years to sell. Selling a home involves agent commissions, taxes, and multiple closing costs. These selling expenses can significantly reduce or eliminate any potential profit. Financial stress from housing costs can also affect personal relationships. Thank you so much for the offer, I truly appreciate it. However, I've decided to stay. I wish you the best of luck. Being tied to one location may result in longer commutes and higher travel costs. In some cities, renting can actually be cheaper than owning a home. Historically, diversified investments often outperform housing over long periods. Inflation also reduces the real value of home appreciation over time. Homes depreciate physically and require constant upgrades to stay competitive. Many homeowners underestimate how expensive long-term upkeep truly is. Over time, housing costs can quietly limit savings and investment growth. Even small recurring costs add up and quietly weaken your long-term financial position. Money tied up in a house often means fewer opportunities to invest elsewhere. This opportunity cost is rarely discussed when people talk about owning a home. Homeownership can limit lifestyle choices like travel, career shifts, or relocation. Look, if we cut down on the dining expenses by 20%, that covers the increase in utilities perfectly. During economic downturns, Housing values can drop, while expenses stay the same. The markets reacted sharply to the news, with the Dow falling another 500 points in afternoon trading. In extreme cases, financial pressure can even lead to foreclosure risks. Forced sales during hard times often result in significant financial losses. Renters can relocate quickly without worrying about selling a property. Lower responsibility allows renters to build savings and emergency funds faster. Investing outside of real estate can offer better diversification and liquidity. Financial success depends on balance, not blindly following traditional advice. Many people never calculate the true lifetime cost of owning a home. When all expenses are added, profits from homeownership can shrink dramatically. After inflation, real home appreciation is often much lower than expected. Diversification reduces risk, while a single home concentrates it. Home equity is not easily accessible without loans or selling the property. Accessing home equity often means paying interest and taking financial risk. Borrowing against a home can increase debt instead of improving financial health. If we diversify this portion here, the returns stabilize significantly. I see, that makes sense. Downsizing later in life often reveals how costly long-term ownership was. Renting. As you can see, the projected growth is quite strong. This portfolio minimizes the risk, so we can still access the funds early. Renting, buying, or investing are tools, not permanent rules. True assets improve cash flow, reduce stress, and grow wealth sustainably. For many people, a home is more of a lifestyle choice than a financial asset. Calling something an asset does not automatically make it financially beneficial. Time, flexibility, and liquidity are valuable financial resources. Buying a home should be a calculated decision, not an emotional one. Asking the right questions leads to better long-term financial outcomes. Financial freedom comes from control, not from owning a specific asset. Education and awareness are more powerful than traditional financial myths. Homeownership can be right for some, but harmful for others. The key is understanding both the benefits and the hidden costs. Making informed choices protects your future and reduces financial stress. Wealth is built through strategy, patience, and smart decision-making. A home can be a comfort, but true assets are the ones that support your financial freedom. Thanks for watching. If you found this video helpful, please like it and share your thoughts in the comments below. Subscribe now and turn on notifications to never miss videos that change how you think about money.